Have you ever opened up a technical analysis report and just your eyes glaze over, with all the oscillators, indicators, and moving averages? Let's be honest, it's like trying to read a whole different language. Well, today we're going to cut right through all that noise. We're breaking down a detailed report on SoFi Technologies, that's ticker SOFI, and we're going to translate it into a story that actually makes sense.
Okay, so let's get right into it. If you're an investor who's been watching SoFi, you've probably got one huge question on your mind. How did they have this fantastic earnings report and then the stock suddenly dropped? And, more importantly, where is it going next? That's what we're here to figure out. We're sifting through all the technical signals to see what the charts are really telling us.
This quote from the report's conclusion, it just nails the problem, doesn't it? It is a classic Wall Street showdown. On one side, you have these short-term technical warnings flashing yellow lights. And on the other, you have the company's amazing growth story, the fundamentals. So the big question is, which signal do you listen to? All right, before we get lost in the weeds with all the indicators, let's just start with the big picture. The report actually boils down all its analysis into one single number, a technical rating, to give us an overall vibe. And that number is 55.42. This is the report's overall technical score, and it's sitting smack dab in the middle. It's totally neutral. It's not screaming buy, and it's not screaming sell. What this number really shows us is the market's indecision. It's like a giant tug of war, and now we're going to see exactly who's pulling on each side of the rope. So, what's actually causing this big tug of war? Well, here's the setup. SoFi just posted amazing Q3 earnings. Revenue jumped 30%. You'd think the stock would just rocket upwards, right? Nope. The market reacted by selling, and that pushed the stock into what the report is calling a short-term pullback. And that's the puzzle we're trying to solve here. Why is such good news leading to a falling price? All right, let's start peeling back the layers. First up, we need to understand the stock's overall direction. Are we just looking at a tiny, temporary ripple here, or is the entire tide actually going out on SoFi? The main tool that analysts use for this is the moving average. And honestly, the best way to think about it is like this. The day-to-day stock price is like all the choppy little waves on the surface of the ocean. A moving average just smooths all of that out so you can see the direction of the underlying tide. Simple as that. And here's where it gets interesting. With SoFi, the moving averages are telling two completely different stories. It's like the stock has a split personality. The short-term view looks pretty bearish, kind of weak. But when you zoom out to the long term, those major averages are acting like a solid floor, a support level, which suggests the stock is really trying to find its footing. And it's not just the moving averages saying this. Other trend indicators in the report are all backing up this idea of short-term weakness. You've got the ADX suggesting the downtrend has some real strength, and the Arun indicator is basically screaming that downward momentum is way stronger than upward momentum right now. So the bottom line here? The immediate trend is not our friend. Okay, so we know the short-term trend is looking a little shaky. But what about the power behind these price moves? The momentum. Is the engine revving up for a bigger drop, or is it kind of just idling in neutral? So, to measure this power, we look at something called the Relative Strength Index, or RSI. Just think of it like a speedometer for the stock price. It tells us how fast things are moving up or down. A really high reading might mean it's overbought, and a really low reading could mean it's oversold. So what's SoFi's speedometer saying? Well, it's kind of parked right in the middle of the road. With an RSI of 46.77, it's firmly in neutral territory. That tells us there isn't a lot of strong momentum pushing the price hard in either direction. The power behind this recent drop, it's actually pretty weak. Now this is where things get really weird. When we look at volume, that's the number of shares being traded, the signals are in a direct fight with each other. The on-balance volume is positive, which suggests that maybe some big buyers are quietly accumulating shares. But then the Chaikin oscillator is negative, signaling selling pressure. So which one is it? Are people buying or selling? The charts are basically saying yes. So we've got a weak short-term trend, we've got neutral momentum, and we have volume signals that just can't make up their mind. Given this whole messy picture, the report lays out three very distinct scenarios for what could happen next. So, let's take a look at the playbook. Here they are, side by side. So, you've got your bullish case. This happens if volume picks up and that RSI speedometer we talked about moves into positive territory. That could push the price right past that resistance level. Then there's the bearish case, which gets triggered if another key momentum indicator goes negative. That could send the price breaking below its support floor. And of course, there's the neutral case, where the stock just kind of chops sideways, waiting for the next big piece of news. The report even calculates a risk-to-reward ratio based on these scenarios, and it comes out to 0.678. Now, to put that simply, this number suggests that the potential upside from here is moderately better than the potential downside. So, it's not a guaranteed home run, but it does mean the odds might be slightly in your favor.
All right, let's pull all these different threads together. After weighing all of this conflicting evidence, what is the final actionable takeaway from this whole report?
So it all boils down to this. The short-term technical picture for SoFi looks weak, plain and simple. But the long-term fundamental story of the company itself, that remains incredibly strong. And that is the central conflict. So the suggested strategy isn't to sell in a panic, and it's not to buy aggressively either. It's to watch the risks, be smart, but to maybe view these little price dips as opportunities to accumulate some shares near those key long-term support levels we saw earlier.
And that kind of leaves us with one final thought. We just walked through this maze of conflicting signals. We saw bullish signs, bearish signs, and neutral signs all at the same time. It makes you wonder, doesn't it? When you use it in the real world, is technical analysis really a precise GPS that gives you a clear route? Or is it more like a travel brochure, just showing you all the different places you could potentially go? Something to think about.